Storm season is basically a live fire drill for the power grid. When a hurricane, blizzard, or major storm hits, you find out very quickly whether smart grid is just a buzzword or whether the system can actually see itself adapt in real time and keep critical power flowing. Because storms aren't the problem, stress is, and the grid is under more stress than ever. Not just from weather, but from how the system itself is changing. Welcome back to the New Financial World Powering Tomorrow podcast, the show where we break down how energy, infrastructure, and digital systems are reshaping the real economy. I'm your host, Zakir, and we're heading into the hurricane season. A major spring storm just tore through parts of the country.
We're just off the southeast side of Rochester here, assessing the damage of a tornado, which obviously was a pretty strong one. From past experience, this is looking like F2, F3 type. Cars are covered.
And here's the reality. For utilities and critical infrastructure, these aren't abstract events. They're stress tests. Storms force the grid to answer three questions in real time. Can we keep people safe? Can we keep critical loads online? And can we quickly recover when things break? Most people still think digital infrastructure is just data centers and AI workloads. But in a storm, you realize the real action is in how the physical grid, sensing, communications, and software all work together. Today's episode is about a shift that most people don't see yet, but it's already happening inside the power grid. The grid is moving from a one-way system to a two-way, interactive, programmable system. And once you understand that shift, you start to see why digital technology and data are starting to intersect with energy in ways that actually make sense, especially when resilience matters most. But first, quick disclaimer. This show is for educational, informational, and entertainment purposes only. Nothing you hear should be considered financial, investment, legal, or tax advice. Always do your own research and consult a licensed professional before making any decisions. All viewpoints expressed are my own and are not of those of any employer or organization. Now, let's get to it. In earlier episodes, we mentioned that for decades, power grid worked in a very simple way. Power plants generated electricity, utilities transmitted it, and customers consumed it. One direction, one flow, one set of decisions. But that model, like we discussed earlier, is breaking. Because of the rooftop solar, the battery storage, the electric vehicles, the smart devices, the distributed energy resources, power isn't just being consumed anymore. It's being produced, stored, and sent back into the system. The grid is no longer one way. It's becoming interactive. Here's the problem. The more two-way the system becomes, the more complex it becomes. Utilities and operators now have to manage thousands, sometimes millions of distributed inputs, real-time fluctuations in supply and demand, bidirectional power flow, localized congestion, and system stability all at once. And extreme weather makes that coordination problem even harder because it's one thing to balance loads on a clear day. It's another when you've got lines down, wind-driven faults, partial generation availability, and thousands of customers hitting outage maps at the same time. This makes everything 10 times harder. This isn't just an engineering challenge anymore. It's a coordination problem. And traditional systems weren't built for this. So what happens when a system becomes too complex to manage manually? You digitize it. You start adding sensors, real-time monitoring, data analytics, automation, and predictive modeling. And this isn't just a utility trend. Once the grid becomes more distributed, more variable, and more transaction heavy, intelligence stops being a nice add-on. It becomes infrastructure. And once something becomes infrastructure, capital starts moving towards it. Companies like GE, Vernova are already pushing in this direction. They're deploying digital twins and predictive analytics at scale, monitoring thousands of critical assets worldwide and comparing real-time sensor data against what those assets should be doing. That shift from reactive to predictive has already helped customers avoid over $1 billion in damage and downtime. At one European industrial site, a digital twin picked up a subtle change in cooling performance on a large turbine. Nothing triggered an alarm, sensors didn't catch it, but the model knew something was off. Engineers checked it, found a simple filter issue, and fixed it before failure. That one catch avoided hundreds of thousands of dollars in damage and lost production. But let's pause and talk about what this means for communities. Because predictive analytics isn't just about predicting profit margins. It's about protecting human life. In the old run-to-failure model, a failing transformer didn't just cause an outage. It threw a spark. And in dry, windy conditions, that spark becomes a catastrophic wildfire. Today, digital sensors can detect subtle acoustics or electrical anomalies in equipment and shut it down before it ever reaches that point. Smart grid systems can detect a break and de-energize that line before it even hits the ground. That's the difference between reactive systems and intelligent systems. And this is exactly why capital is moving here. The electrical digital twin market alone is projected to grow into the multi-billion-dollar range over the next decade. We're seeing startups spin out of major players. Think Labs AI, a GE-linked company, recently raised tens of millions to help grids manage data center demand using physics-informed AI. Utilities themselves are deploying massive capital. Projects like DTEC are investing hundreds of millions to digitize and modernize their networks. And on the distributed side, companies like Enphase and SolarEdge have turned solar into smart, controllable nodes. The grid isn't just being expanded, it's being instrumentated. Because you can't control what you can't see. And you definitely can't finance, verify, or settle what you can't see. That's why the grid is starting to see itself. Now take that one step further. Seeing the system isn't enough. Those systems don't just give visibility. They generate continuous data. Every asset is now producing real-time signals, not monthly reads, continuous streams of what's being generated, where it's happening, how the system is behaving. And the industry isn't just moving toward more data, it's moving toward more granular data. When you move to that level of precision, the amount of data explodes. And at grid scale, even a small inefficiencies in processing the data turn into massive costs. Now here's the connection most people miss. As energy becomes continuous and data becomes more granular, the financial system that sits on top of it has to evolve too. You can't run a continuous system on batch-based finance. Like we talked about in our episode about continuous stream payments and the EEZ. Money is starting to move the same way, not in chunks, but as streams. Instead of for paying electricity once a month, you pay for it as you consume it, second by second. Energy flows continuously, data tracks it continuously, and money starts moving continuously with it. That's not just technology shift, that's a system shift. Let's slow this down for a second, okay? Because this is where most people lose the thread. When we say the grid is becoming programmable, we don't mean code is replacing engineers. We mean the system can act on its own. Decisions get automated, responses trigger instantly. Coordination happens without manual intervention. A spike in demand hits a neighborhood. Storage batteries respond automatically, solar and flexible loads adjust, all without an operator flipping switches. That's programmable infrastructure. Now layer a storm on top of that. Lines down, circuits out, partial generation still operating. A programmable grid can dynamically reroute power around the damage, ensuring the critical facilities like hospitals or homes with life-saving medical devices stay online. And this is where utility workers' safety comes in play. In a legacy grid, Crews are sent out blindly to patrol miles of line in dangerous conditions. In a programmable grid, the system pinpoints the exact location and nature of the fault. That means fewer trucks on the road and less time spent in the danger zone. Storms are where all this gets tested. If you heard in our interview with Benjamin Smith, we talked about how electricity carries attributes. Once those attributes can be tracked and verified, power stops being just a commodity. It becomes a financial signal. And what a programmable grid does is bring that into real time. But here's where things get tricky. Once everything runs on data, you introduce a new risk. Who owns the data? Who verifies it? Who ensures it hasn't been altered? Because in a programmable system, data drives action. Bad data isn't just a spreadsheet issue. It turns into bad actions fast. During a storm, that means a crew gets sent to the wrong place. Or worse, a lineman is told a line is de-energized when it wasn't. In that scale, those errors cascade. You can't assume trust anymore. You have to engineer it. Traditional systems can't keep up. They rely on centralized databases, manual reconciliation, limited coordination. That worked when the system was simple. But now we have distributed assets, continuous real-time data, and high-frequency decisions across utilities, enterprises, data center operators, and third-party aggregators. And like we saw in our episode with Benjamin, even something as simple as tracking energy attributes requires precise verification, ownership, and timing. Now imagine scaling that across millions of data points in real time. The system didn't just get bigger, it changed shape. The old approach simply doesn't scale. This is where the trust layer becomes essential, not as a concept, but as infrastructure. And once again, we've mentioned this before. Back in our episode about tokenizing power, we talked about the key idea was simple. You can turn real-world assets and cash flows into programmable digital claims, but only if the underlying data can be trusted. Otherwise, you're just digitizing uncertainty. Now bring that back to the grid. You need a system that can record what happened, verify it in real time, share it across multiple parties, and execute decisions automatically, without delays, without reconciliation, without relying on a single authority. That's where technologies like blockchain or other trust layer systems start to make sense. Because what you're really solving for is coordination at scale. A trust layer ensures that every participant is looking at the same verifiable picture of what is happening on the grid. In near real time, trust isn't assumed anymore. It becomes programmable. Now let's look at the big picture. Energy systems are becoming distributed, digital, automated at the same time. Digital systems are becoming more dependent on electricity, more real time, more infrastructure heavy. These systems aren't just intersecting, they're converging. And when they do, value moves. The systems that win won't just generate power, they will coordinate it, verify it, and move value across the network. Because the grid is becoming a programmable economic platform. The grid isn't just evolving, and storms are where you find out what's real. A resilient grid isn't just stronger equipment, it's smarter systems, better data, better coordination, and a trusted infrastructure. And once that happens, you don't just change how electricity flows, you change how value flows. Because in a world where systems aren't automated and decisions are executed in real time, trust becomes infrastructure. And that's where the next layer begins. Thank you for listening to The New Financial World, Powering Tomorrow, the show where we break down how energy, infrastructure, and digital systems are reshaping the real economy. And real quick, I just want to say I appreciate all the new subscribers joining the channel. The feedback, the comments, the conversations, that's what lets us know this message is landing. So if this episode gave you a different way to think about the grid, drop a comment. And if you work in utilities, safety, or emergency management, I'd love to hear from how your organization is thinking about this. And don't forget to share this with someone thinking about energy, infrastructure, or markets at a deeper level. Also, quick heads up on the schedule. I know I usually like to post Sundays and Mondays, but I'll be out in Vegas at the Bitcoin conference that week. So the next episode might be slightly delayed, but I'm planning to shoot something out there, maybe even on location, because this is exactly where the conversations are. Infrastructure and finance are happening in real time. So that's why I think it's a big point of why I want to go out there and see how the miners are looking at it, or even if they're coming up with some new ideas with Bitcoin. So until next time, learn, adapt, and prosper. Stay energized, guys.